Hey everyone, Rick Albert here. Let's talk about working with an investor-friendly realtor and how to find the right one for you. Let's get started. Okay, so we all know not all agents are created equal. So I put together this quick presentation, kind of going through certain steps, certain questions, because no matter where you are in the country, if you want an investor-friendly realtor, there are things you have to keep in mind. So let's go ahead and pull it out. Okay, so working with the right investor-friendly realtor for you. You guys know who I am, but let's go ahead and dig a little bit into it just in case. So a little bit about me. I worked with a developer, right? That was actually my background. When I first moved to Southern California in 2010, my first job was buying foreclosures at the courthouse steps. Then from there, we would help with the cash for keys. I'd assist as a project manager, anything from quick flips to brand new construction. I personally own 2 rentals here in Los Angeles. And I now represent clients in buying and selling as a broker associate with America Real Estate. So for those who aren't familiar with it, the difference between a broker associate and a salesperson's license is I actually have a higher level of education. In theory, if I wanted to, or in practice, I could start my own real estate brokerage, but I'm not doing that right now. I love where I am. So let's go ahead and keep it going. I'm also published. So I've been published and quoted in articles, podcasts, as well as I'm a case study for the Bigger Pockets book, The House Hacking Strategy. And I'm the moderator for a landlords group. We have over 500 members and they're all amazing in their own right, but we get to see in real time what's going on from a landlord's perspective. So let's start with why are there so many bad agents? Well, first of all, there is a low barrier to entry. A couple courses, a couple $100, and boom, you have your real estate license and you hang it with, it's called hanging it with a real estate brokerage. So, there's America Real Estate like us, but there's other ones as well. There's also no formal training. So some real estate offices will literally say, hang your license and away you go, have fun. Or they might say, we have training programs, but we're going to charge you for it. So there's not a lot of formality with the position. So because of that, there's many of them that are inexperienced. As one of my mentors said in the past, you can have a realtor who's been in the business for 20 years, but if they haven't learned anything, they only have 1 year experience, right? So just because they've been in the business for a long time doesn't mean they're actually good at their job. The exam isn't geared towards real life. So a lot of the questions on there are like, how many square feet are in a township? Does anyone care? What are the 4 steps from converting a mobile home into a single family home? The majority of the people don't care, but that's the questions they ask. They ask a lot of lending questions. Who cares? That goes to the lender, but that's part of the problem. There's also an unrealistic expectation of what it means to be an agent. So people are watching $1 Million Listing. People are seeing these high prices that we see, and they're like, I want it. I want to make hundreds of thousands of dollars, off a single transaction, when that's not really the case. So they think that there's this vision that this is the most amazing moneymaker in the world, and that's, again, not the case. Unfortunately, for many of them, they're salespeople first, consultants never. So I view myself more as a real estate consultant and equity advisor, which we'll go into in a little bit. I look at myself and say, okay, here's the strategy and the path you should be taking. Some of these people are like, I don't really care. I just want you in a property, or I just want to sell your property and make my money, like a car salesman, which is also a bad stereotype because we all know there's some very good car salesmen out there, but that's really part of the problem. So it's more than just, I'm good at sales, I should become an agent. It's a lot more complicated than that, especially now more than ever. So when finding the right real estate friendly realtor, you don't immediately go to your friends and family. As mentioned before, just because they're your friends and family doesn't mean they're perfect for what your goals are. If you're looking to house hack, if you're looking to flip homes, if you're looking to buy and hold, it's a very different mindset than this is a pretty house. This is a pretty lawn. It's much more complicated than that. Not all realtors are for all people. I've talk to people, they told me what they're expecting. I can't meet that expectation, whether it's because it doesn't exist, whatever the case may be, but it works the other way as well. Not everyone works well with everyone, and that's okay. You're looking for an equity advisor. So this is something, Neil, I was talking to someone, one of my other mentors about this, and the idea is you're looking for someone who wants to protect your equity, who knows how to use your equity, right? Hey, you shouldn't sell this. You should do a cash out refinance, go reinvest that money. Or you should sell it, use that money, do a 1031 exchange, right? Defer the taxes into another property. These are things that an equity advisor would be able to help you on. That's who you're looking for. Find a realtor that aligns with your goals. If you're looking to house hack, I'm your man. If you're looking to buy and hold, I can help with that. But if you're like, I just want to buy a pretty house, I can help with it, but my mindset's somewhere different, right? And I'm very good at that as well. But you just want to find someone who is aligning with your goals. So if you have that friend or family, you're like, well, have you house hacked before? No. Do you own any rentals? No. So why would I want to work with that person? Same applies here. Look for online reviews, Google reviews, Zillow reviews. If someone was willing to take the time to write a review about them, it means they did something good or bad, but you want to be able to read those reviews. Also ask open-ended questions. This is super important. So if we go back to the point about being car salesmen or the stereotypical like just salespeople, they're going to tell you what you want to hear. So if you give them yes or no questions, that's exactly what they're going to give you. Can you find off-market stuff? Yes. But you ask an open-ended question, how do you find it? Oh, well, I network with all these different groups and do this and do that. This is what I do. How do you find these types of properties? What is your strategy for selling my property? And if they just say, oh, it's going on all these websites, make sure it's not websites that are automatically syndicated by posting it in the MLS. We all do it. That's nothing special. Show me the data that properties are flying off the shelves, right? Because every neighborhood's different. Maybe that particular neighborhood, that particular price point, they don't necessarily fly off the shelves. I had a listing recently where I was like, look, you came from a place where homes were selling in a weekend. Now you're in a place where the average days on market is 60 days, 70 days, 100 days. It's a different market. Here's the data, right? You want someone that's showing you the information, not just talking out of their butts. So what makes a good investor-friendly realtor? Well, they communicate clearly, right? They don't sugarcoat anything. They're like, this is it, here's how it is. For many of my house hacking clients, especially when I first meet with them, they're like, I want to lift for free. I want to lift and pay $100 out of pocket. Here's what I explain to them very clearly. If you can put 3.5% down and the numbers work for you to live for free, why wouldn't someone who can put 20% down go ahead and buy it? Right? So these are the types of things that you want someone that can communicate that very clearly, doesn't sugarcoat it. They're strategy focused. Here's how we're going to get you to your goal. It's not, I'm setting it up on the MLS. It's like, look, you want to house hack. Here's the numbers you're looking at. Here are the areas we're going to do. Here's how we're going to do it. You're going to live in the ADU. You're going to rent out the main house. Therefore, the main house has to be a minimum of 4 bedrooms. Like all that has to come together, right? You want to sell a property and someone that's investor focused. Hey, here's the strategy getting your home sold. These are the improvements I recommend you make. Here are the improvements I don't think you should do. I don't think you should redo the kitchen. I think you should redo the landscaping, right? There's different things depending on the data. They also have a basic understanding of tenant laws and construction costs. These two things can vary every day. As the day of this recording, I just watched another webinar about the updated laws, and it's not easy. But I have a basic understanding, and you should work with an agent that has a basic understanding. You should have an agent that can walk through a property and be like, yeah, the approximate cost is this, if you really want to do it, right? So that way you know in real time what you're getting yourself into. As an investor themselves or on a team with investors. So when I first got started, I hadn't house hacked yet. I was still renting a bedroom from a buddy of mine. but I had people on my team that had been investing for over 40 years. So if you can't find someone that is an investor, make sure they're working with someone that is, because again, they're going to have a different experience than other agents will because they've just never done it. You also want someone that's a shark. You want someone that's going to be like, look, homes are on the market, properties are on the market for 60 days. Let's write a low offer. Hey, you have inspection reports. Let's try to get you a credit, right? Someone who's very focused and truly has your best interest and wants to find you a deal. Because keep in mind, the lower the price of the property, the less the agent makes. But if they're a shark, they don't care because they know in the long run, it's going to be repeat business, referrals. So they're going to go out of their way to make sure you get a good deal. So setting expectations for the realtor. First of all, let them know your level of real estate experience. Are you a first-time home buyer, first-time home seller? Are you very experienced? I had a client that had a ton of experience. So all I had to do was say, this property looks interesting on the surface. He did his own calculations, we wrote an offer. Versus others were like, look, this is my first-time house hacking. Okay, here's a property, here's some basic breakdowns, let's take a look at it, right? So it just depends on the person, so you gotta let your realtor know your level of experience. Tell them your goals up front. Hey, my goal is to house hack. My goal is to sell my property at a certain dollar amount, right? So it's like, okay, you want to sell your house for $1 million? This is what you got to do. Here's how much it's going to cost. And then you can go through that dance. It doesn't make sense. Does it not? All depends. Tell them how you like to communicate. Texts, emails, calls. Everybody's different. Some people are glued to their phones. Others aren't. So you need to make sure you understand the best way to talk to them and how they should be talking to you. And then what are your general concerns? Let them know. If you don't tell them, then how can they be the best at their job for you? Now, some setting expectations for you. If you're buying, have your financing in order, right? The pre-approval, already paying cash, have that stuff up front. Because as soon as you see a property, you want to write an offer on it, well, you're about to lose 2 or 3 days because you didn't get that stuff in order. By then, the property could have been sold, right? Because my number one rule in real estate is the market waits for no one. The seller is not going to wait for you to get your act together to write an offer. They're going to take the first best offer that comes in. Also, loyalty comes a long way, right? There are people who work with multiple agents. That's fine. That is a strategy, but it can make things very complicated if I send a property, but then so did this other agent, same property, who do you go with, right? Or if I have clients that are loyal to me, I have to prioritize, right? That's how this works. And communication is key. Gotta talk. If you have problems, ghosting your agent, not a good idea because we don't know what's going on. Are you still buying? Are you not buying? Or if you're in escrow, whatever the case may be, make sure there's constant communication and there are no stupid questions. Now, when you're selling, listen to your realtor, and I say with proof. If they're saying, hey, should I change out the floors? You say, sure, here's the type of flooring I recommend. They're doing that because they looked at other sales and saw what's trending, right? So listen to them because they are doing this, hopefully, day in and day out. Yep, make sure the property is available and presentable. The more complicated you make it to show, the less likely buyers want to see it. And they may want to renegotiate the price because of it. I know this because I've done it for my clients. I told my clients, let's write a low offer, a lower offer. It wasn't that much lower, but still, I said, look, it was priced fine to begin with, but let's write a lower offer because it's difficult to show. And so if you're the seller, you're going to be like, well, I might as well take this lower price so I don't have to deal with keep showing it, right? So if you're listing your property and you make it really available and you make it presentable, you have a much higher probability of getting the price and terms you want. Also, have open communication expectations set with tenants. First of all, to be clear, if you're selling your property with tenants and you don't tell the tenants, that is against the law. You have to tell your tenants that the property is for sale. But I keep seeing that they're not doing it. But something to be aware of. But set expectations like, look, we're selling the property. First of all, are you interested in buying it? And two, we need to start scheduling when we can do showings. Is it group showings? whatever the case may be, let's have that communication. When I sold a property with tenants, we literally said, okay, let's push everyone to open houses, right? Or, hey, these are the days that we can do the showings. And then pay the agents what they're worth. Grinding them down on the commission actually hurts you more than it helps you, because for two reasons. One, because again, if those clients, if that agent has other listings that are paying them more, where do you think they have to devote their focus to? And two, there are expenses. There's marketing expenses, right? Photography, videography, whatever it is. Now you're cutting into that margin. And if they're making less, that means they're doing less. So is there a housing crash coming? We might as well throw this in there because that's always a question. A couple things to point out. One, there's submarkets upon submarkets, price points, locations, right? What's going on in East LA is different than what's going on in Beverly Hills. Los Angeles, Southern California has a variety of neighborhoods with different price points. So if someone gets priced out of one neighborhood, they have somewhere else to go. There also isn't much land to build, right? What we're seeing are called small lot ordinance homes, SLOs, where they're classified as single family, but on a practical basis, they're almost like townhouses, 3 levels with a rooftop deck. That's about as close as we're gonna get to a single family home. The cost of construction keeps going up, right? So you can't build affordable housing. That's just mathematically impossible. If you watch some of my other videos, you'll see. It's actually growing to be one of my more popular videos, but check it out. But because of that, you can't really keep up with demand, right? People only have so much money. Supply and demand still plays a role. So as long as we have low supply, the demand's still gonna be there. As of right now, millennials are creating household formation. As interest rates go up, it does push people into the rental zone. So now we're gonna see more people looking for places to rent, which pushes rents up. Month supply, this was as of March of this year. That was at 1.5. So basically, if no new homes came to the market, it only take 1.5 months to sell. Now that number is actually going up. It's in the 2-month range. But still, that means we need triple the inventory just for it to be a balanced market. Anything below 6 months is considered to be a seller's market. Anything above 6 months is considered to be a buyer's market. Some interesting statistics. So this is taking data. This has all been presented by MBS Highway. They take data from the Federal Reserve, current unemployment rates, National Association of Realtors, and more to come up with potential projections. So you can see in LA County, we are going to see a slowdown. That makes sense, and that's actually a good thing, but we're not seeing price dips. Ventura County, on the other hand, is seeing a big jump. You can see 11.25% over the next year. And again, the name of the game is affordability. So as people get priced out of Los Angeles County, they're going to head over to Ventura County. Something to think about in your investment game. Recession does not equal housing crisis. So 3 of the last 5 official recessions, we did not see price reductions. Even if you want to count COVID as a recession, right? 2020, home prices actually went up. There is not a direct correlation, primarily because people still need a place to live, no matter how the stock market's doing. The next part, generally speaking, people have seen a lot of equity growth. So it's not like we're really going to see foreclosures, because they'd be better off selling than it would be to stop paying their mortgage, right? I could sell my home, I can sell my properties, cash in, then go rent, and my credit isn't hurt, right? There's no foreclosure on my record. There's no sign of me being behind on my bills. So from a tenant's perspective, they look good on paper, and they might have a bunch of money in the bank. So because we're seeing that, it's unlikely we're going to see this massive wave of foreclosures. So is there going to be a housing crash? Unlikely, at least for the majority of Southern California. People don't have to move, right? Especially for those that refinance. People have equities. They don't have to be forced into foreclosure. The ones that will struggle the most are the lower price for first-time home buyers, right? As people get priced out of certain neighborhoods, at some point we're out of neighborhoods. So that market, that's when they start going to Riverside, potentially Ventura County, wherever. But for the most part, people are going to be able to figure it out. And there's going to be a slowdown in pricing. We are seeing other parts of the country right now. Phoenix is one of them where we saw some price reductions. Austin, Texas, which was like one of the hottest markets in the country, they're starting to see a massive increase in the number of listings they have on the market, which means supply is going up. Could be for a variety of reasons. I'm not in that market. One could be, hey, my neighbor got this price, I want to get that price. Or two, Texas doesn't have a cap on how much you can raise the property taxes. So for some of these people, they're receiving these massive property tax bills that they weren't used to, accounted for, and they actually don't have the money. So it'll be interesting to see how that plays out. In California, we have a cap of no more than 2% per year. So ours is much more predictable than other people, especially if you have a fixed rate mortgage. So then it's really just the variable would be your insurance. So when should I buy? When the time is right for you. If you're looking to invest in real estate, you should jump into it because it's all about the long-term gains, not necessarily what's going to happen in the next 2 months. When you also have the financial means to take on the risks, right? There's risks with any investments, so you just need to be best prepared for it. Great example is I'm looking to buy again. We have some money in the bank, but we're setting money aside for repairs, things like that up front, so that way we don't end up house broke when we buy it. If you're currently renting, rents are expected to go up. It was reported at least 7% over the next year, but that's nationwide. I would not be surprised in LA County or some parts of Southern California if it bumps up to 10% or more, just by virtue of low inventory. Or you're just ready to expand your portfolio. You're at the point in your life where you're like, look, I have some good rentals, they're cash flowing, I have my best practices down, let's do it again. So when should you sell? Well, do you have any vacant units? Right now, vacant units are selling at a premium because there's this market called house hackers. They want to buy owner occupied because they do a lower down payment with better interest rate. And if it's a rent controlled unit, now that buyer can get market rents. So the value just jumped. Do you have a better use for the money? If you sell today, what are you going to do with that cash? Are you going to reinvest it into another property? Are you going to pay off some of your debts? Whatever that is, have an idea of where can I use the money? And is that a better use of money than keeping it in the property and continuing to build equity? Or decide not to be a landlord anymore, here or elsewhere. That's okay. We are seeing some people who are like, look, I don't want to invest in LA anymore. I'm going to use this equity that I have, right? Equity advisor. You're going to use this money that you have and reinvest out of state, bigger properties, whatever it might be, because I'm choosing not to be a landlord here in town anymore. Or you're ready to retire, right? So, hey, look, I'm willing to sell off my portfolio, collect the cash, and just live out my days. So if you ever have any questions, escrow questions, general questions, let me know. Follow me on social media at Rick B. Albert. So it's Instagram, TikTok, Facebook, LinkedIn, and of course, watching it on YouTube. Thank you so much for watching this. I really appreciate it. You guys have a great day.